Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel, joined by Joel Elconin and Dennis Dick. Well, this was supposed to be a morning about the jobs number, but it's ended up being a morning about more tariffs. We had that announced last night before the opening of the S&P futures. $100 billion in potential. It was out. Staying corrected. It was after the open. More tariffs coming, weighing on the market. So that'll kind of be, again, the top story of the morning. We do have some individual news as well. MGM sniffing around in Wynn Resorts, some drug news, Merck and Insight. But that'll kind of be the main theme that'll be the main theme of the day, at least. And we do have a perfect guest to discuss that. Ron Insana, a longtime CNBC contributor. He would join us at 8:35 to kind of break it all down for us and really just kind of help us make sense of this market. So that'll be a good guest to look forward to in about a half hour from now. Joel, what is doing this morning?
The SPOOs are down 25 handles, 36.75. We had a flat open and actually tried to rally, got to 26.64. Not sure if we're going to see that number today. And then just after the 7 o'clock hour, $100 billion in Trump tariffs. They knocked the SPOOs down to 1975. And the buy the dippers did come in last night. And Dennis think they may come back in again today. Rebound high off that's 48.75. We'll be keeping an eye on that. Bitcoin, the futures down $140. Crude in the red by 50 cents is 63.03. Gold can't catch a bid either. Down 280 at 1325.70, and silver down 11.5 cents at 1624. Dennis, we're going to bring you in here. In the intro, you say you're going to buy. I will buy the stock for a penny. Are you referring to Micron?
Yeah, I know. That thing keeps going straight down. And obviously, I did not buy, so I talked about it yesterday on the show. We know I started 1/3 of my position at 60. Absolutely wrong. I guess I'm happy when I put 1/3 in. I'm going to buy the other 2/3, but it hasn't really given me a reason to do it yet. I loved the candle from 2 days ago, but then we came out with the sell rating, and I wanted to see how it responded to that. It did not respond well, obviously, just continued to collapse. I'm like, oh, man, on the 35 PT, so it spooked all the longs. Now it continues, and, and we're going to get into the market in a second, but I just want to say, Fast Money, you get some pretty good information from them, but holy cow, very disappointed with the commentary from Fast Money last night because they've been pumping Micron for a long time, 50, 55, 60, Guy Adami talking about going to $100. We've been pumping it a little bit on this show too, so I'm not saying, I've been saying the same thing. I think Micron is still, I don't know if it's going to $100, but I still like Micron. But here's why I'm poo-pooing on Fast Money last night. Last night, Fast Money comes out, bearish report on Micron, saying they think it's going lower. Dan Nathan on there. Guy was trying to defend it a little bit because he knows he's been pumping it. But, the whole intro is like, oh, here's one trade that's going to say it's going to go a lot lower. I mean, holy cow, chase price, guys. For 2 weeks, the last, 55, 58, 60, 62, you guys are telling us to, that you like Micron. Now you're telling us you don't like it at 48? I'm going to tell you the exact opposite. I still like Micron here. So I'm not going to go, completely against and chase price here. I think, Micron is still a good price if you're buying it long term. I think I'm going to get it cheaper, which is why I haven't bought the rest of my position, though. It's through support now. You're through this double bottom here. The market looks ugly. I mean, we're down significantly on that spot. We're going to get a jobs number here. There's just no support until 45. So I think I'm going to get this at 45 or 40 now, and that's where I'm going to buy the rest of my position. Still like it here, though, so I'm not going to come out and say, oh, sell this thing. I think it's going to $35. I'm going to say, I think as a long-term investment, I like it here. But I'm waiting to buy more at 45.
Dennis, you've been talking about this stock, and I couldn't. You're too slippery. I haven't been able to make a wager with you on anything here on the way down, and I don't know. I just don't have a good feeling about this one. I just think I think the run is over. What about the old overhead supply now? If this thing tries to rally, you got a lot of people.
Two hats. Should I take my one hat off and put on my other hat? Because what you're talking about is a trade. And I completely agree with you. I just got done saying I think it's going to 45 or 40. But you've got to have more than one hat. I'm going to bang the table right now. Because if you're just trading all the time and not thinking about long-term investing, I think, as me, I want to retire one day. So John Dotson asking, how long is your long-term time horizon? I'm talking with multiple hats here. I talk day trading 90% of the time. Right now, I'm putting on my long-term investing hat. And I'm saying if you're buying Micron at 47.87 here this morning and looking at it 20 years from now, 10, 20 years from now, because I'm 41. So I'm going to retire, let's say, when I'm 60. Maybe I'm never going to retire because I like trading. But let's just say, hypothetically, I'm going to retire in 19 years. I'm building a portfolio for that long. I bought MasterCard back in 2007. I bought, stocks. I started buying stocks, my investment account back in 1998. That is 20 years ago. So yes, believe it or not, in my long-term portfolio, my time horizon is 15 to 20 years. Back then, it was 30 to 35 years. I've still got stocks that I bought back then. I'm sure happy that I did it because those are the stocks that are making my portfolio. Those are stocks I'm up 500, 1,000% on. So I'm trying to take the Warren Buffett approach in that way. I'm not saying you have to do this. I'm saying this is the way that I do it, though. But I think it's important to separate trading from investing. As a trade, I think Micron is broken. I think it's going to 45 or 40. But as an investment, I'm saying I might be wrong. And I think there's value here. I still think there's value. I think that's why I'm holding off on my investment. I'm trying to time my investment a little bit better. But sometimes when you get greedy, you miss them all together. JP Morgan, I thought we both thought was going back to $28 when it was 32. Well, we should have pulled the trigger because it's $100 now. So you got to wear more than one hat, in my opinion, in this market. Wear an investing hat and a trading hat. That's why I have separate accounts for it. I don't have my investments sitting in front of me. I have a separate account at BMO Investor Line that I do my long-term investing in because I'm Canadian. And then I have my short-term trading accounts, which is obviously, I trade through Ready, through, Bright Trading, and then also I trade through Interactive Brokers. Those are my trading accounts. So as a trade, it looks like it's going to 45 or 40. As a long-term investment, I might be wrong. I think you can't, go wrong here if you got 10, 15-year time horizon on this.
Okay. Angie Baby wants to know if you rotate quarterly, and you don't do that, right? You don't.
No, I don't even try to look at my investment portfolio. I look at the story, and the story has changed, and I'm not liking, or if something's got ridiculously ran, sometimes I'll take the profits too. I used to do this thing, and Kramer used to talk about it too. I'm torn on it. I haven't been doing it lately. But when a stock doubled, I used to sell half, and then I'd be like playing completely with the house's money. But in some instances, I haven't been doing that lately. And you get up 300-400%, those things become big winners. I mean, we've talked about some of my big winners. I'm in MasterCard from $16. It's 173. I'm up 1,000% in it. I wouldn't be able to do that if I had in my trading account because I would have traded out of it a long time ago. So that's why I have to, put it in a different account that I don't look at it. I will have weeks on end that I don't even log into my investing account because I don't want to look at it because the trader blood in me will say, oh, you're way up in this thing or this thing doesn't look as good on the technicals. You better sell it. So I try as much as I can to not look at it. Sometimes the trader guy comes over in me and I make a poor decision usually when the trader guy puts on, you don't put on your investing hat, you put on your trading hat and you start managing your portfolio. Put on your investing hat when you're managing your investment portfolio. Put on your trading hat when you're managing your trading portfolio.
Okay. And are you still around 100 stocks there, Dennis?
Yeah, I'm about 100 stocks. And Stock Jock says, how can you follow that many? And Kramer says all the time, don't have over 10. But I'm more like a mutual fund. When you have 100 stocks, it's amazing how closely my portfolio will mimic the overall market. So I've got a bunch of stocks in there, but I'm a little bit more dividend oriented. We know that. So I'm a little bit lower beta. But it's amazing how, closely it does track with, a lower beta dividend portfolio. So what am I saving by doing that? Well, I'm saving that 0.5 or 1% management fee because I'm doing that myself. I've built my own portfolio. Yes, you have to adjust a little bit. Yes, if a story on a stock has changed, I don't like the story anymore, I'm going to get out of it. But for the most part, you're really still moving around with the overall market. So I'm saving myself those management fees. Now, as a trader, I'm in a completely different boat. I'm doing things all the time. I talk about all the time. I'm a hedge trader. I trade long, short. That's what I do. So what does that mean? It means usually I'm net market neutral. I'm trading market neutral. So I'm looking, if I like a stock, I'm going to have an equivalent short another stock. Why do I do that? because when the stock market goes down 1%, I don't lose 1%. Or, maybe you say, well, if you would have been short, you'd make 1%. Yes, but I'm trying to take advantage of little micro inefficiencies. It might be, news related. It might be just, doing, well, I do the S&P ARB, but I do a lot of different other things too. But I'm always trying to just take advantage of some, inefficiencies in my trading. I'm more of an inefficiency trader. We know I love to look at order flow, and I think you can grab a lot of inefficiencies looking at the order flow. Technicals too. I incorporate that into my inefficiency trading as well. If I think something's ready to break down, I'm probably not going to buy it. I'm going to be more prone to short it. So there's a lot of different tools you can use in your toolbox as a trader. But, the rant I was just having is try to separate it. If you were, building a long-term investment portfolio, try not to trade it.
Okay. All right, Dennis, thank you for that. One of your better rants there on long-term investing. Let's try and cover a few stocks here.
Well, let's talk tariffs overall here, first of all.
That's what we got to talk
Spencer,
about.
give us the details for anybody who missed it. Why, we're trading down 1% here in the pre-market, and why, obviously, this market is spooked here once again.
I mean, I kind of said it in the open there. He instructed the U.S. Trade Representative to consider another $100 billion in tariffs against China. This was out last night. This morning, he did tweet also about aluminum. If I remember, that was like an hour ago now. But so we don't have any more details that I've seen about what these new tariffs could be, the new ones. But I mean, this is a story now it's clear that it's not going to go away. So the only question that remains is how will the market's interpretation differ each time?
He tells us we're not in a trade war, and then 2 days later he comes out, puts $100 billion, or saying he's going to put $100 billion worth of tariffs. We're fully in a trade war here. And we're going to have Ron Insana. I really want to ask Ron, most of these questions, because he's the guy who's going to be able to answer some of these questions here. Personally, I'm very scared about this because I don't know if this continues to escalate. It almost seems a little bit childish. Oh, you're going to put 20 billion or whatever China's put on? We'll put 100 billion on. I mean, it's just kind of, you're playing around with and I don't know if you know what all the repercussions here are. That's why I was challenging the tariffs in the first place. I'm shocking Larry Kudlow is in there now, and he's all about free markets and I don't know. Obviously, he's not listening to Larry, because I don't think Larry would support $100 billion in new tariffs going over there. I mean, Larry's going to be on Bloomberg, I think, later today. I'm interested in that interview if they're going to ask him that, but we'll see what Ron Insana says. But, I took some economics courses in school, and I don't know if I'm fully on board with this, let's get into a full trade war here from the U.S. perspective, especially with a country like China, who produces all of our goods for the most part. So yes, you can say, okay, well, yeah, we bring in a lot more than we export to them, but they also got a hell of a lot of our debt too. So we've talked about that on the show before as well. So I just don't think you should be over there and, ticking these guys off for, a lack of a better word.
What's the over-under on Kudlow in the White House? Do you think
how long he stays?
Yeah, 6 months.
Well, if he's opposing, we know you never stay long opposing Trump. And I'm sure Larry Kudlow wasn't the one who made the decision to put $100 billion in tariffs. I watched him on CNBC a long time. It doesn't sound like his style.
No, not at all. But I'm looking at Alcoa. I mean, if that's, if it's something that's supposed to be benefiting from this, it's not. Alcoa is trading down 99 cents in sympathy with the market. This chart doesn't look too good. We'll see yesterday's high, 48.73. Not sure we'll see that. The low of the move, and this is kind of similar to the charts that we've had in the market and a lot of stocks, a lot of lows in the same area. And that's a 43.70 area. So I might take a look there. It doesn't look like we're going to see that today. That's still $3 away. But if this is supposed to be helping, aluminum tariffs, you think would help U.S. companies, so far you're not having that reaction in the market.
So, this Alcoa chart is a perfect example of what I was talking about to you on the pre-market show. I mean, yes, this is scary stuff here that we're hearing overnight, but also we're coming, a lot of stocks formed some nice support levels, and look at this 44 to 45 on Alcoa. So now you come back in and you're going to get, somewhat, a lot closer to that support level than we were at the high yesterday at 48.73. That's why I think maybe there's a potential that people are going to buy the dip here again.
Yeah.
Like I'm not selling it into this 45 support. It's held 1, 2, 3, 4, 5, 6, 7, 8, 9 times really. I know we breached at 43.68, but call it 44 to 45. I don't know. I come here this morning, I'm going to sell into that. It doesn't make really that much sense to me. So, can it slip down to there? Yes. But keep an eye on this market, kid, because there's some nice support down here if you get a little bit lower in the market where you might get a buying opportunity. We're going to get that jobs number at 8:30. Let's see, obviously, what happens before we make any real decisions here. But I think I'm nibbling on my portfolio again. I was nibbling yesterday. I think I'm going to nibble here on this pullback in the long-term investment portfolio. And as a trade, I'm kind of interested in some of these stocks too. I mean, think about the stocks that have been strong. That's the ones you want to own on the pullback here. I mean, holy cow. And you want to talk about a stock that was strong yesterday. What about this Tesla move? We had Jason Raznick on the show 3 days ago, and it was 260, and he was saying, I'm buying more here at 250, 245. Jason, if you're listening, I hope you did buy more because it was a great call by you. 2-day rally. This thing goes up 50 points in 2 days. That was absolutely incredible there. That was a buying opportunity on the recall. They came in with their buying shoes on. So it pulls back a little bit here now. I mean, Tesla's back in favor. Just like that. It's back in favor. These stocks turn in a hurry there. Because why? Because there's people like me who are still underinvested, and they keep coming into the market on the pullbacks here. Tesla, everybody's licking their chops, and great call by John Dodson in the chat as well. I believe it was John talking about that level that we had back, and we talked about it on the show too, back in March when we got to 243, 244. Well, Tesla got to 244. And that was the low end. You know what? If you bought it there, you're up 60 points as of yesterday, obviously giving back 9 or 8 this morning. But, incredible comeback here for TSLA.
Okay. All right. Spoos are trying to come back. We're only down 23 now at 38 in a quarter. All right. We got some possible merger and acquisition here, or a takeover in the casino industry.
Rumors.
Just rumors.
Tell us about Spencer.
Just rumors from the New York Post, who's generally pretty good about this sort of stuff. Obviously, no one's perfect, but they're reporting that MGM has expressed interest in acquiring Wynn Resorts. And that was news, I believe, that broke overnight. I thought I saw some action in Caesar. I thought last time I checked, which was like 2 hours ago now, that was getting hit. Maybe it was only one trade, though. But that's the news of the morning, at least in M&A land.
I just want to make a quick note. I have not done all my research yet on some of these casino stocks. But my cousin Jimmy, who's a pretty good astute long-term investor, he sent me an article about a U.S. Supreme Court decision. It's going to rule before July regarding sports betting in individual states is a violation of the 10th Amendment. And if that's overruled, that, and you get sports betting here in the United States, that could be a big boost to casino stocks. A couple of them mentioned MGM, Las Vegas Sands, all the big ones, Penn National Gaming, Boyd Gaming, Churchill Downs. And speaking of Churchill Downs, Dennis, did you hear the terrible news yesterday in the Detroit area?
What happened?
They're closing Hazel Park Raceway.
Did you know this, Spencer? Did you know this terrible news? The horse guy.
I knew it. I knew it yesterday, but I'm not like a local, so I don't really care.
And I don't, go to the horse races over in Detroit either. So
but some people here are very.
I know Joel. The one thing, and if you don't know Joel, if you haven't been listening to the show very long, Joel knows stocks and Joel knows horses, but he knows horses almost better than anything. So whenever a raceway or stuff like that, Joel is that's going to take him right to heart there. So did you place a few bets at that raceway, Joel?
Oh my God, I've been going there since I've been 5 years old.
Joel goes there like every race.
We still got no. Why
didn't you ever buy some horses? You should have bought some horses.
No. Bad my dad owned racehorses, and it was a great tax break. And because you could feed your horses like 60,000 bales of hay or whatever, and you could write off all the expenses. So that's why I did it. And then he told me that, and this was later on, he said that he didn't want to get involved in chemical warfare, and that's because people were using drugs. And you know what? Fuzzy's asking if I've been to Freehold. I have been to Freehold Raceway. My dad actually took me out of school one day to fly if we had a big race. He did.
Joel's had his math test. We can't write our math test today because my kids got to go to the raceway with me. Exactly. Priorities here, teacher.
Yeah. All right. So, all right, we're really digressing.
That's great. That's where Joel gets his gambling blood
it's
from.
Not
anyway.
gambling.
So you get it honestly. It's not gambling, he says, because
past performance.
It's informed gambling.
Yeah, you look at the racing program, it's just looking at a stock chart. You're looking at what the horse did or what the market did in its previous performance, and you're using that to predict what it's going to do in the future.
Informed bet placing. That's what we do as stock traders, and what we do at the Raceway.
Okay.
Very closely related.
Let's talk stocks, though. This is a stock show.
Let's get back to WYNN. Wait. Let's get
Jobs
back.
number coming in 8 minutes here.
This came off the WYNN-MGM.
Yeah,
give me the WYNN news.
I gave the WYNN news.
What are you doing here? You don't even give us any news.
Give me the
tangents.
Give me the technicals. Give me the technicals.
All right.
Anyways, okay. So rumors that WYNN-MGM sniffing around and WYNN. WYNN is trading up $3. This is from the New York Post, like Spencer was saying. They are significant. This isn't, just any, this is significant source. So it is trading up on this, but it is still rumors, and there's been rumors circulating ever since obviously Steve Wynn says he's out. I don't know. I think it's not a bad idea. It's because of the name that still scares me. Obviously, we don't know if there's going to be more allegations or anything more that comes of, Steve Wynn's private affairs. But his, name is blasted all over the casinos. And I think, Wynn Resorts knows that it's probably his name is, tarnished here at this point in time. We talked about that. So maybe the best course of action would be for them to sell or, they sell part of the company. That's my opinion. Now, from a technical perspective here, stock is obviously putting the hard bottom at 160, comes significantly off that, on the rumors before that, somebody might actually acquire them. And now we get more rumors here. So 183, we're trading this morning. It's kind of in the middle of nowhere for me. I mean, if you want to play these rumors, maybe it materializes. Maybe they get $200. Maybe they get more. Maybe it doesn't. So I don't know. I'm kind of sitting on hands here. I just don't see that much.
All right, let's just take a look here. The pop that it got to 190, 190. And that just coincides perfectly with a triple top after the news. So that's a huge level, not only for today, but moving forward. We peeled back to the 184 level. In order to get into yesterday's range, you got to get to 183.17. But, on the daily here, I think you can you do have some really good consolidation here between 175 and 185 for the most part. So I think a break above 185 looks good, and real good support at 175.
Let's jump over to some other stock news there. And there's one Merck Insight. This drug trial didn't go well for INCY, and they are taking it on the chin. Merck is involved in this too, and they're trading down. Spencer, the details here on this Merck Insight drug.
Yep, this was the first, according to Adam Feuerstein, who's a great reporter in space, first real test of cancer. The first real test of cancer immunotherapy combination between Insight and Merck, and they did not meet the primary endpoint of improving a progression-free survival in this immunotherapy drug. So that's a big blow this morning.
I mean, Insight here, we'll talk Merck in a second. We know Merck, this isn't as big because they're so much more diversified, such a bigger company here, but this is a huge move for INCY. It's down 20% here now. If I go to my loser board, it is number 3. This other one here, I think, just had a bad tick. So we'll strike that one from the record because it says RXL trade at 60, which is obviously not the case. Somebody messed up big time selling that. They're going to hope for a bust on that because that is a fund and it's closed at 85. So somebody messed up selling that at 60, just 200 shares. And then the other one is NLNK. So the leader of the loser of the day, that is New Link Genetics, which is down 39%. INCY is number 2, and it is trading down 17 points. Joel, give us some level.
Oh, man. I mean, they're throwing some volume around here, too. You got to take note. 500,000 shares have traded over 500,000. And it's not going up. You're high. This is what you want to keep an eye on. After the news came out, you made a high at 69.50. Actually, the low was on the initial bar at 64.99. So I'll keep an eye on those parameters. You have not been in the lower 60 handle for a long, long time. 60.30. That was your March 2016 low. So you can go on your dailies or your weeklies to find support there. But as of right now, I would be, if you want to get involved in this stock, keep an eye on that first bracket right after the news came out, 69.50 high and 64.99 low. And then Merck's taking it on the chin too.
A
little bit.
But not really when you consider the market's down, 1%. So really it's down 1.38. It's really kind of, not even a big deal for them. And what about this support in Merck? We're forming a lot of support down 52 to 53 in Merck. No?
No, a lot. And with this one, though, kind of sleepy chart here. 56 has kept a lid on things for a long time. So
yeah,
if and when
range bound.
Yep, very range
bullish
bound.
above 56, bearish below 50.
52.80. 52.83 has been the low of the move. You kissed it a few times at 53.12 and 53.36. May see that today. I think anything under 53, you find buyers here in Merck.
I think you find some buyers.
Now, this one, I'd be a little bit more interested in, a little bit of a dividend, long track record. This one I'd have
smaller. This is not as big a deal for Merck as it is for Insight, which is apparent in the stock prices this morning as well. Full disclosure, still have my long-term investment in Merck and sticking with it. Had it in there for about 10 years.
10 years. Okay. All right.
Jump. We got 3 minutes here before the jobs number. Just a couple other stocks. Talk about this elephant move from yesterday because holy cow. Talk about a short squeeze. LFIN is squeezing them again here this morning. And that's the risk. I mean, these stocks, go, and then they, the stock loses, 90% here in 4 or 5 days. Well, you're squeezing the hell out of those shorts right now. Gets down under $10, hits to 8.11. CEO is going to come on CNBC 2 days ago, and that was kind of the catalyst that kickstarted it. And now it's just in full short squeeze mode. It's up another 20% here this morning. So I don't think by any means this company is turning it around. I think this is a complete short squeeze. When they finally squeeze out, it'll probably start to leak here again. But right now, LFIN is in short squeeze mode.
Yeah, 22.50 was yesterday's high. In pre-market trading, we got up to 24.27. So if you want the move to continue, you got to clear that 24.27 and then flip a coin where it's going to go because your 4-day high is way up at 33.72. So if you are, trading this from the long side and you do get above that, I'd throw it out at the half and whole number and see if they take your offers. If they don't take your offers, then start hitting bids. Big move. I really have tried to keep this one off my screen. It's really not much of interest to me. 8:27 and 48 seconds. Dennis, do you want?
Yeah, I'm gonna hop off. I'll let you guys preview the jobs number, maybe go through some charts of some of the banks because we know the banks typically move the most off of this news.
Okay, Dennis is going down into his bunker here. We got a lot of news, a lot of information going on. I think if you get a pop here in the SPOOs, 48.75, I want you to keep an eye on because since we've had the rebound, it's the 630 to 645 bracket. We hit 48.75, and the other reason there's some significance to that level, you have Wednesday's close at 47 even, and then the intraday low, and that's the low that I talk about with you guys. That's the low between 9:30 and 4:15. That was 49 even yesterday. So there's potential resistance. If not, maybe we'll see that close at 61.75. On the downside, wow, I wish I could tell you there was something between this and the pre-market low of 2619.75. Maybe I'll just go a little bit shorter term with you guys here and let you know 34.25. That was a low around 8 p.m. Spencer?
You want some numbers?
Yeah.
Well, we're looking for 185,000 jobs in March. We're looking for unemployment to fall to 4%. We're looking for wages to grow 2.7% year over year. That's all in line with what we've seen recently. I did see an interesting tweet just coming across from Zero Hedge, which I guess we'll find out if this trend continues or not in a moment. But the tweet from Zero Hedge, interesting. Consensus estimate has overestimated the initial March non-farm payrolls print in 4 of the last 5 years by an average of 62,000 jobs. So we're about a minute away from our
buy the dippers. You're getting ready here.
Report.
5, 4, 3, 2, 1. You give us a number, Spencer. I'll give you the trading.
I'll give you the number as I see it, but it's 8:30, and when we wait for it to upload in my, hold on 1 second. Where's my number?
So far they're hitting it. Jobs report imminent. breaking news. They just hit the spoos a little bit. We are getting the number as we speak, back in the 2640 handle. Folks, remembering we're keeping an eye on 4875 here. If we do get any kind of pop here.
103,000 is your non-farm number. Again, I mentioned we were looking for 185 for that. I'm sorry, 193 was the estimate for non-farm, and 103,000 is what they actually saw. So they came in about 90,000 jobs less under the estimate. The prior reading, if you remember back to February, was 313,000 jobs. So light on the non-farm payrolls for March. Unemployment rate 4.1%. If you remember, the estimate was 4, so they beat that by 10 basis points. And what's happening, Joel?
Well, your spoos had a dip, and now they're having a little bit of rip. The buy the dippers coming in again, so we will keep an eye on 48.75. Gold got a nice pop up to 1336.70, and silver moved along with that. A little bit of a weak number. Spinners pointing out here. So the bank. I mean, I'm seeing the spoos move up, but I'm not seeing any of my stocks really go up here yet. I'm watching the top 10 components in the S&P futures: Apple, Google, Microsoft, Amazon. You guys know what they are, and I don't know. They're just, I don't know, something wrong with my trade station here, because I see the futures. No, they're moving. The futures are bouncing around. Haven't reached that 48.
Too much chop. It's too much chop. It was hard to trade. I mean, we chopped down 0.2, we chop up 0.2. We just chopped around there a lot. We really didn't, and we were already down. So much news already affecting it. It's hard to just like say, okay, yeah, this is good or bad. So I will say TLT caught a pop on this, and so did gold. So obviously, when the TLT pops, you start to think, well, that's not good for banks. Banks hit a little bit on it, but not a ton. I mean, I can see, JP Morgan, like they were already all down because of the overall market. So they're just kind of hanging out here too. So very, very indecisive market here on this number. We've really gone nowhere. We've just chopped around about 20 or about, five handles.
Yeah,
up,
both
up,
ways.
Up 3-4, down 3-4. They can't figure out whether they want to take them up or down.
That's interesting now that we have 5 of the last 6 years, they've overestimated the initial March number. That's interesting. Anyway.
Very, it's interesting. Just action here. There's just a lot of news,
really
a lot of headlines here. Obviously, we got the jobs number, we got the Trump stuff, and stocks are just kind of all over the place. They can't decide whether they want to buy them. Real battle between obviously bulls and bears here. It's going to rage here for a while this morning.
Yeah, I would keep it. I mean, we did a little pop up to 46.25. I was hoping for a lower risk short up at 48.5, 48.75. No can do there. Really have a hard time, finding a place to buy, to buy the dip here. The only thing I'll probably be leaning on a little bit is 30, 26, 34.25, 34.25, those are some lows that you made between 8 and 8.15, and we're approaching here. So it looks like the jury is kind of making their decision here, and we are now falling.
Starting to get weak off.
Starting to get weak. Okay.
Yeah, we're down about 3-4 points since started. Or actually, maybe a little bit more than that now.
There's that 34.25. That was quick. You had to be quick to get it there.
It's really chopping around here. So let's let the dust settle a little bit here. In the meantime, we'll go grab Ron and Insana, and we will talk some Trump with Ron here in 1 minute.
We'll be right back.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards. And we are joined by Ron Insana, a longtime market follower, CNBC contributor. Ron, how you doing today?
I'm doing fine. I'm watching the markets and determining whether or not they're going to hold up today or sell off again.
I'm sure they're going to do a little bit of both, but we talk a lot about short-term trading. We try and put on our long-term perspective every day as well. But, here, great day to have you on, talking macros here. A lot of different things going on with the administration, a lot of different potential rises in interest rates here. Give us in order of importance, your focus and some of your outlooks for the markets.
Well, I'd say my biggest focus right now is on this trade dispute between the United States and China, which the president ratcheted up again last night, even over the comments of his own economic advisors who suggested that they're looking for a negotiated settlement to the trade dispute with China. Instead, the president, in a fit last night, suggested he's considering another $100 billion worth of tariffs on Chinese goods on top of the $50 billion already announced. China said it will fight this trade war to the end with the United States. So stock index futures last night were down 400 points. They paired some of those losses. And I think because of the manner in which this is being played out, it creates not just a degree of uncertainty, which, has become a hackneyed phrase on Wall Street, that the stock market hates uncertainty, but it becomes actually dangerous because there are real economic consequences to this trade war escalating. And so as a consequence of that, I'm concerned that this could either spin out of control and lead to a disruption in global economic activity, and certainly hurt not just markets, but hurt individuals, whether they're soy farmers or wheat farmers, or they're in the steel business, where a friend of mine from high school is actually seeing a persistent 30% increase in steel prices in his business since the president first announced those tariffs on steel and aluminum. So this becomes a real issue for real people as well as a market issue. And so that's the thing I'm focused on most closely. The economy looks okay. Jobs are a little bit weaker this morning than expected. That might keep the Fed from getting too aggressive. But really, the trade stuff, I think, is front and center.
It is front and center. Ron, Dennis Dick here. And obviously, S&P's tank last night, the S&P futures, when we find out that Trump is considering another $100 billion. Couple questions for you. First of all, what's Larry doing in there? Because Larry Kudlow, he wouldn't be for this, would he?
No, I don't think he would be. But I also think that, ultimately Larry's going to be a good soldier in all of this, because he said before he took the job that once the president makes his decision, after there's been a spirited debate, it's his job to execute and sell policy. So if that is the approach he's going to take, and the president makes a decision that he would indeed like to slap another $100 billion worth of tariffs on China, and that's that, then it's Larry's job beforehand maybe to try to talk him out of it, but afterwards to effectively help implement policy. Now, presumably there's some sort of negotiated settlement that they're trying to work on, but every time the president kind of throws gasoline on the fire, it sets back the probability of a calm, reasoned negotiation. And so Larry can try as hard as he wants. He may just run into trouble with this president, as other advisors already have.
I mean, isn't it just an issue? Like, it kind of seems childish almost to keep coming out. And, we saw this last year, obviously, with North Korea and Trump tweeting, at North Korea and talking, the missiles and saying, oh, we have bigger nukes. I mean, it's kind of the same thing in a different scale, obviously. China comes back with tariffs, we'll come back with bigger tariffs. I mean,
and listen, China can, and they have the reserves to potentially outlast us in a trade war if they were really going to take the long view, because their people would suffer from, lack of food imports and other goods that upon which they rely. But at the end of the day, China is also the largest holder of U.S. Treasury bonds, over $1 trillion worth. And if they really want a messy kind of mutually assured destruction type event to take place, they would dump U.S. Treasury bonds. And now, low probability event, but it's a risk. And I don't think it's one that the president has fully considered, particularly since we're borrowing $1 trillion this year.
I mean, a lot of people just want to get back to that bull market that we had in, 2016
in January.
Yeah. And, to me, the thing, I mean, yeah, you can lean on those February lows, but, to me, you've been in the markets for a long time. I mean, this volatility, I mean, it's not symptomatic of something that's good. I mean, to me, this market's just the vol's just going to have to come down in order for us to continue the ascent higher. And it just doesn't seem like that's possible with what's going on in Washington.
Well, you had 14 months of virtually zero volatility throughout the entire period after the election. You did not have a 2% day up until February. Throughout that entire period, you had nothing but a 3% drawdown peak to trough over a period of maybe several days. So you've effectively had the VIX, the volatility index, sitting at around 9 for a protracted period of time, something we'd not seen before, particularly for the length of time that it went on. So no doubt volatility was going to return. That it returned with this kind of vengeance is a little surprising and, not unexpected that you would see a pickup in volatility. But now I think we've already had 2% days, which is certainly more than we've had in the last 2 years. And we've only had a few other years where, you've seen double-digit days, high double-digit days of 2% vol. So, yeah, look, it makes people uncomfortable. It makes people uncertain as to when their entry and exit points should be if they're trading. It makes people nervous if they're longer-term investors and they don't know when the market or if the market's going to settle down, or whether these policies are going to lead to the type of volatility really that we saw in the late 60s and 70s, where we basically slammed around between 700 and 1,000 for 18 years. You could end up in a situation where the market goes sideways and has these violent, kind of moves from one low to the next high, and really goes nowhere for a period of time except just slamming back and forth in at that time what was a rather sizable range. And you could see that again. There's nothing to prevent that, particularly if we go down this road where a global trade war erupts.
What about the narrow leadership in the rally?
That's the
FANG
problem.
stocks. I mean, go ahead. Just comment on that. And wouldn't it be healthier, maybe take a little bit out of FANG, boom, put it more into, value stocks? Is that something that you're looking for?
Well, it's something that people are talking about. I mean, they're hoping that financials would kind of pick up where the technology left off, but that's going to be hard given the volatility in interest rates. They're hoping that energy could pick up if oil prices stay high, and energy stocks, which have lagged and have become the smallest real weighting within the S&P 500, that's the type of rotation you would typically see where you sell the winners and buy the losers. But, being long energy stocks in an environment where there's a great deal of uncertainty around energy prices themselves, may or may not be, a tradable play. So, yeah, what you'd really like to see in an ongoing healthy bull market is leadership from finance and technology, and that right now is not happening. So, again, it's more indicative of the corrective process we're in, and I think that's going to persist. My friend Joe Terranova from Virtus and I have both been talking about that this may not just be a correction in price, but also a correction in time. One that lasts longer than the typical V bottom that we sometimes see. And it may strain people's patience because sometimes you do need time to correct the excesses and allow the market to consolidate both its gains and its recent losses and find a new base before it moves higher.
All right, we're just going to let you go, though. But, man, I remember we had you on the show a couple times a long time ago, and I still hope you're holding your Valero, VLO. You said if there was one stock, that was a long time ago.
$90 a share now. Right?
It's considering
it's a great company, and
you still hold it.
We got plenty of oil. Well, no, I don't at this point in time, but and it was a mistake to have gotten rid of it because it just
okay. You got another pick like that?
I always looked at it as a seasonal play, but it's turned out to be one of the best performing stocks in the energy sector by far. And look, refining capacity is somewhat limited, but there is huge demand for gasoline, and they've done a great job managing that and extending all the way out to the consumer with their gas stations as well. So great company, great stock, and probably the best pick in the energy sector.
All right, Ron Insana has been on with us. Ron, thanks so much for your time.
Thank you, guys.
All right.
Take care.
All right.
That was good.
Nice bounce here off that 34 and a quarter
Big time.
level.
Big
I didn't
time.
even get a chance to look at it for a second. Did it tick 34? Let's see if we could. That's one good thing about the S&Ps, Dennis. If you have a bid in at 34 and a quarter and it trades 34, you're done. We actually got to 33 and a quarter. Now we're rebounding. The first rebound hit 48. Now we're looking at 48.75 as the path to, higher, maybe even getting unchanged. Dennis, what do you, are stocks starting to wake up a little
Oh yeah,
bit?
they're starting to lift. There are some stocks that are lifting, multiple, obviously we're down significantly on everything, but stocks are slowly starting to come back here. Even some of the banks are starting to leak back up. I mean, they're just following the S&Ps. So yeah, obviously we're down over 1% here this morning, only down 0.6% here now. So S&Ps and stocks are starting to, follow suit and starting to come back here as well. So there is some of this buy the dip mentality already out here in the pre-market. That's what I was talking about when we came on the show originally, and even talking the pre-market show, is I think the sentiment of the market turned there the last couple of days. That's why I think there might be a tendency for some traders to come in here and actually buy this dip, even though it is scary news.
Yeah, I mean, I'm not going to rule anything out today. The market going green, getting up.
Oh,
we're not that
totally
far away.
Yeah,
17.5 handles. So got a lot of good trading action. So
how much were we down at the bottom?
We were down to 2619.7.
That would have put us on what handle? So how many down? 40?
Yeah, and
just down 40.
Yeah, it was in your low in the spiders was 261.51. So
they got over half the loss.
Yeah, we were up. Actually, Dennis, you are an astute trader here, because this number I'm not going to be able to trade off a lot today because we've chopped through it so much. But mid range on the sessions 26.42. But it's just lost significance because it's probably gone through it, 348 times here in the last hour. But we'll keep an eye. Also, we'll be watching that opening print on the 9:30 open. See where it is. See if it's certainly going to be lower than that 6 p.m. open. Stocks, let's see here. Have we covered? We did the Insight Merck. Delta data breach, that doesn't seem to be having much an effect.
Well, it was a couple hours ago. I don't know if we're still feeling anything.
I don't know if any of these data breaches, unless you're Facebook, obviously, which is significant, like Delta. I don't think it's a big deal for the stock here. I don't think you're going to see it do a Facebook and lose 5-10% here today. This is going to be a non-event for Delta, in my opinion.
All right.
Lots of other stocks here. Well, obviously, everything is moving around, but just quickly go and cover the quick ratings because we didn't do them yet. And there's only 4 or 5 really of note. The one I did notice, VRX Mizuho, upgrading them here this morning, is trading in the green. I did stick VRX in my invest portfolio. I was a little bit early because I'm down, I think, $1.50 in it. But I'm sticking with it just because I think VRX is somewhat. They've sold off some stuff. They're trying to get out from under this debt. It's still a wild card. I didn't go like crazy capital into it. Still a little bit more speculative, but I don't mind it here. If VRX can get above 16 as a trade,
there you go.
I think it could be in breakout mode. That's what so as a trader, I put my trading hat on. I want to see it above 16. Obviously, it was a little bit early on the investment because we broke down and continue to break down, but it's trying to fight its way back. The argument is there for that double bottom that put in place in March. So I don't mind the setup here. I would love to see it above 16, though.
Take a look at the VRX chart here. We got yesterday's high at 15.94. Your 2-day high, 15.83. I mean, there's going back all the way to the 23rd, you've had all those highs around $16. So we'll keep it on that. Trading up 4 cents at 15.83. So not really affected by the market. Spot got the Kramer pump last night. Let's see what the trading action. We had a nice debate with Sean Udall a couple days ago.
Feels like years.
Yeah, up 376. Not much trading action. 2 closes around 144. So 2 out of the 3 closes. So we'll keep an eye on 144. Yesterday's high way up at 152.41.
Not enough information for me to really make a technical call on this. You're only on your 4th day of trading. So like Fiery Hams, you'd say I want a little bit more, a few more trading days before I start to, get a technical feel for something like that. XLNX Xilinx is catching a downgrade here to underweight at JP Morgan. Had a pop the last couple of days, but is weak here this morning, trading down $1.75 in the pre-market. I think it's going to test that low from 2 days ago, 68.04, just because JP Morgan obviously has some weight and it is a downgrade to underweight. So I don't know if did they put the price target, Spencer?
I didn't see it, PT.
Anyway, $68 is, that was a level back in December, January. That's a level it needs to hold, but concerned it could take it out.
Traded down to 67.14, folks, but that was on 382 shares. So we're still doing some price discovery here. Dennis mentioned your 2-day low at 68.04, and then two other lows. They're actually above that at 68.45 and 68.5. So keeping an eye on that 2-day low at 68.04.
One more rating.
Yeah, go ahead.
One more rating I wanted to mention. Sunrun, RUN, getting the double downgrade from Bank of America, downgraded from buy to underperform. So they're just skipping neutral
all the way
altogether.
They're hitting it hard on this. Stock is trading down 7% here in the pre-market. It's been on a hell of a run. So from 5 in February up to over $10, everybody buying, and over the breakout over 10 yesterday is significantly underwater. That becomes major resistance here now. It's a call like this can turn the stock and the sentiment towards the stock. And obviously every pullback has been bought in Sunrun. I think I'm more of a sell the rip in this thing now just because of this call. And I think you get anywhere near, upper 9s here. I think you got sellers now that are maybe spooked and people who want to lock in because it's been on an impressive run. So you got a lot of people sitting on gains. And that's why I think this could actually go lower. And I'd be a seller of rallies.
All right. Big volume coming in this in the last 2 days here. Over 5 million shares have traded with your 982.
Capitulation almost.
Yeah, so I don't know. Could be rough.
Capitulatory top, upside capitulation.
Yeah. Let's see. We're 926 though. We haven't taken out two lows at 892 and 894. So keep an eye on that. And we'll see. Under that, you can see your daily lows. A lot of lows in the 8 handles. So I don't know. I don't know if it's just going to rip there. It looks like you have 3 lows around 850 as well.
I think it sees 826 before it sees 1026.
Nah, I'm not doing. I'm not going to take that one. You're so really, lucky. I mean, I don't want.
Okay.
I don't want to.
We'll just lay out the bets.
Okay. Because unless you want to make one in Micron. I'm not going to bring up Micron. No, I just.
Oh my God. I'm obviously taking some heat on it, but again, that's why I only put 1/3 of the position. I never do that either. I always just buy it, or I don't buy it. I don't usually average it. I usually buy the position, or I don't buy the position. But for some reason, my spiny sensor was saying I want to participate, and that was before the quarter. They just in case they blew it out, which they did, and it goes higher. But I didn't want to get murdered either. So I was like, I'm going to put a third and buy another third of 50, another third of 40. And then I haven't bought my other third of 50, thankfully so. But I was just, somebody was asking me over in the chat too, are you still going to buy it? And yes, I am. If this thing gets down to 45, I think that's where I'm going to pull the trigger on some more. And who knows, the way it's trading could get there today. And then I'm pull the trigger on the rest of it 40. Still like Micron.
Robinhood chart here. Let's see here. 51.74. Wow. Closed right on the high. Trading up 6 cents. I mean, this could
stock?
Cake. I'm sorry. I'm
like,
looking at Robinhood chart. I know.
Holy cow.
Look at that.
Cheesecake Factory. Everybody's eating cheesecake.
Oh my gosh, it is. It's looking nice here.
No tariffs on cheesecake coming in.
40 at the portions are still too big. 58.
That Reese's. Have you been there, Joel? This is before you get into the cheesecake factory.
Years ago.
I had that Reese's peanut butter cheesecake or something there. That thing was to die for, literally. Like I honestly thought I was going to die after I ate it.
All right. Let's see if there's any paper here at 52, but this looks like a clean breakout on the monthlies here. That breakout was at 51. And it cleared that. So keep eye on the close. It was just a real big, you talk about your 2-day move. Well, it's a 3-day move and 2 big bars yesterday. So keep an eye on the closing price.
Is this due to reports, Spencer? In the chat, they're talking about when is the earnings? Like, I'm just wondering, what is a catalyst from the last 2 days? Why did this thing blast off? Is there was it an upgrade? Was it?
Good question.
Was there a catalyst?
Good question.
When did they do the report?
They were due to report. Might have been.
I mean, everything I guess blasted off to a certain extent on one day. So maybe it's just the big 2-day move with the overall market. No. But it just looks like almost like a news move to this.
No, they're not. According to me, May 2nd. So that's not.
No, a long way away.
I think he said he played it. He played it.
Okay. Yeah. So it's a month away still. Anyways, great move here for CAKE. Great ticker symbol there as well. Okay, jumping over here. Got oh man, where was I going? I was going to ask somebody. No, I lost my train of thought.
Okay, I want to bring
do the show. I never lose my train of thought. I lost my train of thought.
No,
we were talking cake. I got all excited about eating that cheesecake, and now I forgot what I was going to talk about.
Okay.
Joel, help me out.
I want to talk about, and I like these kind of plays here with the Masters going on, right? You got Jordan Spieth leading after one day. And man, I never bet on golf, but I was kind of thinking, man, we haven't heard his name in a while. But the reason I'm mentioning that is because of Under Armour and being a representative of that. And there's a nice setup here in Under Armour. I mean, who knows how he's going to do today? And you certainly don't want to base your portfolio on things like this because you won't be able to know until Sunday who wins. But pair highs at 1584 and 1586. This also was an area of contention back at the beginning of March, 1573, 1585, 1570 here. So not a bad looking chart, but first you have to respect the resistance there, and it has been major resistance since actually late February. NTNX, did you mention that as a disaster stock, Dennis? No, Nutanix.
Only down 1%.
No, not sure. I'm bringing it up, but I will just tell our traders here, 52.06. That was yesterday's high. We're trading a buck. Look at for the close there if you want the mark. If you want a little bit of a better target, if we go to rally mode, March 27th, you had a high of 52.58.
Okay, it was buy Apple from the chat. Not we're promoting to buy Apple, but that's his handle. He was wanting to ask me overall thoughts here today, and I always like to give my overall thoughts, and I think the market's going to go green. So I don't know if it stays green, but I am a buyer of the pullback here as a trader here because this market, I like yesterday's tape, was a little bit, 2 days ago was a tell. We talked about that. We'd follow through. We did not give the gains back yesterday, even though the market wanted to at one point in time. We held on. Now, obviously, we get down here. I think you got a lot of institutional money managers that are saying, man, I see the double bottom they're talking about. I think, that there's this potential for this market to get back up to the highs within a few months. And I think they're going to be buying on this dip. So I don't think this is going to be a day that we go whoosh. I think this is a day that we have the potential to go green. And obviously, we've gotten a lot of the losses back already. We're down 40 handles, only being down 17 here now. I think we go all the way. I think we're going green here today, so I'm a buyer of the pullback.
Okay.
As a trader.
That's the trader in you and the long-term.
That's the trader hat. So I switch my hat. I should have the hats and it won't say tiger. One will say trader, one will have investor. I keep switching the hats.
All right.
The trader hat says buy the dip.
And
the investor hat says buy the dip as well. The trader hat and the investor hat are agreeing today. It says buy the dip. I must be really wrong.
You should be like.
That's what I was going to say. You must be off.
I must be real. I'm double wrong here if it tanks here today.
You should do like that.
It's a tough market to call, though. It's a tough market right now to call, Joel. It really is.
What I think you should do, Dennis, is when high school players decide where they're going to go to like the college, they have all these different hats in front of them. Like Michigan or Alabama or something like that. And then they put it on. So that's what you should do at the end of every show. It's like, up market, down market, buy the dip, sell the rip. That would be
we have the TFD hat or STFR hat.
Or GTFO hat.
GTFO. That was Joel. You coined that one. GTFO. You guys can figure that out. Get the.
All right. One more and we'll wrap. Fire Eye levels. Getting beat down.
Where's Fire Eye? I want to buy that on the pullback. Man, I missed the pullback. I missed the pullback and everything. This is what the investment managers are doing. They all missed. I missed. Everybody missed. That's why we're buying the pullbacks here. That's why money managers come back in, and I think they're going to take this at green today.
All right. We traded down. I mean, we had a pop from 1775. I mean, not much volume is traded in this one, Spencer. I'll tell you, yesterday's high area of significance, 1774. We're trading above that. So light volume, though. Major support if you want to buy this on the cheap. Anywhere near 1650. That's major support. And the recent high of the move, if you continue to rally, 1799. That was a high that you had back on March 21st, but the recent high in the move, and I think this was after earnings, was up at 18.84. All right, Spencer, 1 hour of nonstop stock talk. I
thought you were going to say 1 hour of nonsense, which is more sometimes where we go on this show, but that's okay. I think we're all a little bit ready for the weekend. But
Yes.
on that note, we're going to wrap it for the day and for the week. I hope you enjoyed the shows. You can catch any old interview or any old show on our podcast, iTunes, SoundCloud, and Stitcher, or just rewatch it on YouTube. Thanks to our guest, Ron Insana, for joining us today. Thank you to our people who joined us in the chat on YouTube and at premarket.benzinga.com. Keep it show there, folks. But that's going to be it for us today. So hope you all have a good day out there in the market. Hope you have a good weekend, and I hope we will see you again on Monday. That's all.